Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, May 13th, 2019. I am Frank Ochoa, aka PivotBoss, and we are beginning the day with another round of selling pressure here, and this does not look good already. Again, China trade talks breaking down, and that's leading to additional selling pressure here already to begin Monday morning, Sunday evening, however you like to see it here. This was the previous Friday. That was the Sunday night move along with the continuation the rest of the week. This was another strong finish on Friday, and now again price opening below the midpoint of Friday's range. That is a very bearish open, and anything that pushes higher from there is usually rejected, as it was. So again, this is an indication that we will likely see a push through recent lows. Anytime you open through the mid, 9 times out of 10 you take out that low. And so we'll see how this continues to develop here. But again, any failure to get back above the 2850s, 2860s, that would suggest more weakness, and we could be looking at a push downward toward 2700. As I mentioned before, 2703.75 would be the major target there. That's the midpoint of the large impulse sell-off from last year. That's the point here where we failed to find acceptance above that level and fell in back in October. So you can see right about here, that zone right there, and it fell right to the 2703.75s. Again, we're failing here. We've taken the pivot range offered. We're now sitting right at the previous month's low with a shot to drop right into 2703.75 as a very quick target. So again, the way that we're setting up here does not look very bullish. Even when we've found what could be seen as strong lows during certain periods here, has been easily sold off right away. So this market is jittery at best. And again, until we find a significant strong low, we could be headed quite a bit lower. 200-day moving average here, 2772. So again, much more downside could be seen here before this thing starts to see a bit of weakness. All right, let's take a look at the NQ. Very similar price action here, where you have a solid rejection here Thursday and especially Friday, and now opening below the midpoint of Friday's range and driving lower, not quite at the previous session's low, but getting there. And we're also approaching the previous month's low right here as well. That is very important because again, anytime we sell off from that type of relationship, then we break the previous midpoint, we usually hit the previous low. So to come this close and not get there is usually kind of odd. And so that's why I'm usually patient, because at that point you usually see some sort of takeout of that low. So we're coming down to take out that low. We'll see how much more downside we get. But if you look back here, again, we were forming a little box here right above these highs. The last time we sold off, we came right to this point here, and that's the 69.17 level. That's an FOMC level. That's a big time level right there. Are we going to see that type of move again? If not, the 72.14s is an easy level right there, and that's another key level from a previous high. And so that's a spot right there that could be easily tested here pretty soon. So again, we could be looking at quite a bit more downside until significant rejection occurs. If I switch this around to the bear targets based off the current month's high, you can see we can go down here to about 27.14.5 and still be average for the month based on average monthly range over the last 10 months. So somewhere in this zone could be a very easy target here the rest of the week. All right, let's take a look at crude oil. Crude oil is up quite a bit. Big time move here off the lows already in overnight trading. You can see the previous low failure, just like it was back here, just like it was right here, previous low failure. But really we formed a very narrow range here. We haven't seen much expansion. We can't get above the 62.70s right now. We still are in a very bullish uptrending phase for this one. We're holding the $60 level, which is a big time level. But after you form rejection, if you go sideways for 1, 2, 3, 4, 5 days and you can't get going to the upside soon, that's about the time when the stops can come out and you can dip quite a bit lower. any push through the 60.75s opens up quite a bit of downside as the sell stops would likely come out. Now the opposite can be said here too. On the upside here, with this rejection and these bulls defending, at some point the bears up here will become exhausted, and that's when the short squeeze may come out. So again, we're looking for a very narrow range for breakout. Overall, we've gotten a very tight range here over the last 5 sessions, and it's currently a developing day. But as it currently stands right now, if it were to close in this range here today, which is already a pretty decent range for the day at 91% of average, again, that would be very narrow, and we'd be looking for another 6-handle breakout. So 4 to 6 handle breakout in a 5-day range. All right, let's take a look lastly at gold futures here. What you'll notice with gold here is we've gotten quite the rejection here off the lows. We pushed up. The rejection off 1290 was very strong. The next day held inside the trigger zone. 2 days running held in the trigger zone, and here we are with a failed low trying to develop right now, and it's still inside the trigger zone for the most part. That usually looks like it wants to break bullishly. It looks like it wants to push higher. Again, with the failed new low developing today, that could really lead to some sort of strength to the upside, especially if the markets continue to drop. This one perhaps could continue to push higher. Any close above that midpoint right there, or above 1290 especially, really starts to squeeze this thing. And on Friday, it looks like it did just that, and already we're seeing failed new lows and starting to pop a little bit higher here, and that could lead to quite a bit of strength here that could take us easily back to 1300, but more than likely we get somewhere in the 1310 to 1315 zone. All right, that is it for now. We'll see how this plays out heading into the new week of trading. Good luck, trade well, and I'll see you in the trading room. Take care.